I want you to imagine with me. Here's a scenario. You did well at your job, and the company rewards you with a bonus of $1,000. There are many things you might do with that money. Perhaps you would pay off some debt, or you might put it in your savings account for a rainy day. If you're religious, you might give some of that money to your church. You may feel generous and give a bit to your favorite charity. Someone adventurous might start an online dropshipping website. You might think to put some of it towards your retirement or building your portfolio. There's 1,000,001 things you can do. The similarity with everything that I've mentioned above is that they are all forms of investment. An investment, in the most general of terms, is giving some asset, some resource, in the hopes of a greater return in the future. More specifically, for the purposes we'll talk about today, we'll be focusing on economic investments, the outlay of resources or assets with the goal of generating income or appreciation. Firstly, let's break down those two words. Appreciation is how the value of an asset will hopefully grow over time. For example, when you buy a house, you hope that the value of that house will appreciate over time, rising higher and higher so that when you or your estate sells that house, you'll be able to sell it for more than you bought it for. Income is the idea of getting more money directly from that investment. For example, let's say that you bought part of a business and that the business would pay you a percentage of their sales each quarter. That would represent an income-focused investment. Often these two ideas work in tandem. For example, if you were to buy a rental property, you'd want to gain income from that property from your tenants while also wanting the property to appreciate over time. The rate of the income and appreciation from an investment can be measured as the rate of return, typically known as the ROR. There is one more fundamental part of investments that you should be aware of before you invest, and that is the risk of the investment. This risk is typically, but not always, related to the return on investment, with investments with higher rates of return having a higher chance of failing, whereas investments with lower rates of return typically having a lower chance of failing. However, this is not always the case, and each investment should have all the pros and cons weighed before investing in them. Now, there is a lot of different options for investing. You might have heard about stocks, bonds, foreign exchanges, mutual funds, savings accounts, indexes, options, cryptocurrencies, and more. Welcome to the world of investing. It can be overly complex and very confusing. A lot of people can be scared away by the levels of complexities, but that's why this channel exists. Let's talk about some great entry-level investment products and figure out which ones are best suited for you. I think it's super important to have a good mix of investments that you can depend on for saving for the future, extra spending money, or something to make a living off of. Let's dive in a little to the wonderful world of investing. Firstly, let's talk about bonds. These are loans that are made to a company or government. With these, they carry very low risk. In many cases, bonds with federal governments such as the United States government, the government of Canada, etc., are considered one of the most secure and most reliable investments that you can make. Also, as they are a loan, bonds are a fixed income investment. When you buy them, you will receive a set rate that payments will be made at for the length of the bond, however long that is. The downside to bonds is that with the very low risk they carry, they also offer very low returns. For example, most Canadian and United States bonds offer yields of under 1%. Bonds are great for when you're investing money that you really don't want to lose. Remember, with every single investment you make, also consider the possibility of losing your investment. That is why diversifying your portfolio, that is, making sure your money is spread over different types of investments, is crucial to being a good investor. The next type of investment I want to talk about are mutual funds. Mutual funds work by pooling money from many different investors and then employing a manager to invest that money in stocks, bonds, and other assets. Typically, there will be mutual funds geared towards different things, such as different risk tolerances, different nationalities of investments, investing in clean and ethical assets, and the like. As the assets within the investment make money, a portion of that profit is returned to the investors, and the value of that investment grows. When the assets lose money, the value of the investor's investment in that fund shrinks. Also, you'll typically pay an annual fee called an expense ratio to invest in a mutual fund. Mutual funds are great because they allow you to focus on different assets depending on your own risk tolerance and needs, while also easing the experience of investing by having a manager to watch over your money and having a set of professional eyes looking over your investment. I personally recommend, if you are looking to get into investing, to look into mutual funds. Of everything we'll discuss today, they are, in my opinion, the best mix of potential profit with ease of use, which makes them perfect for starting out. It's also very easy to start investing in 2 or 3 mutual funds to ensure you diversify your portfolio. Finally, let's talk about stocks or shares. These are much more complex than bonds or mutual funds, and as such require more treatment and care when dealing with them. Firstly, it's important to understand that stocks represent a small fraction of the ownership of a company. By purchasing a stock or a share of a company, you become a shareholder of the company. Quite literally, you hold the share. Some companies give you the share, and with it comes nothing else. You get a look at that share certificate, and this is solely an appreciation investment. You need to hope then that the value of the share will go up and be worth more in the future than you bought it for. Some other shares will offer more. Some will give you voting rights. While personally I love being able to vote in the decisions of a corporation, I know that unless I have many shares, I probably won't be swaying any decisions anytime soon. For most people starting out investing, the ability to control the decisions of a company isn't the main reason for their purchasing the stock. What I do look for in shares are dividends. Certain shares will pay out a set amount per stock, typically yearly, biannually, quarterly, or monthly, and this payment is known as a dividend. Now, to new investors, especially if you're young, I recommend that if you are wanting to purchase stocks, that you purchase shares of a business that will pay out dividends to you. The reason for this is that it is easy to start a cycle of exponential growth of your shares should you wish, or it can provide a semi-consistent flow of money that you can use for extra spending money, savings, or investing elsewhere. When many people think of stock markets, they think of traders buying thousands of a stock and then flipping those for a profit quickly. While traders can make great amounts of money from doing this, it is very risky and requires a huge, very detailed understanding of the stock market. I personally find a much greater value in researching and picking quality dividend-paying stocks to create additional forms of income for you or your household. Bonds, mutual funds, and stocks are just 3 of the many investment assets out there. More so, I hope that today you understand the basics of investment, what appreciation and income investing is, how risk factors into the investing world, and that it is important that regardless what your investment is, that you do your research. I would like to thank you for watching this episode about investments. Please like and share this video, and subscribe to All About the Money. A link to our channel's Patreon can be found below in the description. If you have any questions or comments about anything brought up in the show today, please feel free to leave them below. Once again, thank you for watching.